Hello, this is Alex from O&G Tax and Accounting Services. So in this video, we're going to answer a very interesting question that was recently asked by one of my potential clients. And the question here, well, let's start with the fact. So this person sent me a question saying that a foreign individual owns a U.S. LLC, which is formed in the state of Delaware. And therefore, the LLC is a foreign-owned U.S. disregarded entity. So I assume the foreign individual owns it, and he's the only person that owns the LLC. So it's a foreign-owned U.S. disregarded entity. And then he goes on to say that there is no income if the foreign individual owns another corporation, which is outside of the U.S. Okay. So at this point, he says that this foreign person owns a U.S. LLC, which is formed in Delaware. And that same foreign person owns a foreign corporation, okay? And he transfers 100% of that foreign corporation, 100% of the shares of that foreign corporation in that foreign corporation to the LLC. And he's asking whether this occurrence or this event is going to trigger 5471 filing. Now, this is a very interesting question and it's a very good one. So I'm going to do my best to help you understand the complexities involved in this. It may be complex for some people. It might also be easy. For me, it's easy to explain this, but then it might be complex for other people. So stick with me and then we're going to discuss this real quick. Now, before we start off, let me just state that this video is for educational purposes only. It is not meant to be a legal or tax advice. And if at any point in time you need a legal or tax advice, you should always consult with a competent tax attorney or CPA. All right, so we know the fact, okay? So this person says that you have a foreign person, okay, a foreign individual who formed the Delaware LLC. And that same foreign individual has a foreign corporation somewhere outside of the US. And after forming the LLC, this person transfers the shares that he owned in that foreign corporation and gave it to the LLC. So now it looks like the LLC owns the shares of the foreign corporation, okay? So the structure is that after the shares is transferred to the LLC, you would have the foreign person owning the US LLC and then the US LLC owning the foreign corporation. And the question is whether a 5471 filing requirement is triggered. So we're going to talk about it. Now, before we start talking about this thing, it's very important for you to know that Form 5471 is required to be filed by certain US citizens and residents, okay? So 5471 applies to US citizens, resident, green card holders, and resident aliens or anyone that has passed the substantial present test, okay? It does not apply to foreign persons, okay? So if you're a foreign person, don't be thinking about 5471. IRS 5471 is required to be filed by certain US citizens and residents who are officers, directors, or shareholders in a certain foreign corporation, okay? So there's three things that you need to know, or maybe there's even one or whatever. You have to be a US citizen or a resident or a resident alien or someone that has passed the substantial present test. And to be able to file 5471, you must also, have been an officer or a director or a shareholder in a foreign corporation. If you fall into these three categories and you're a US person, then 5471 could be triggered, okay? Now, the form is very complex and is intended to report the activities of that foreign corporation. Okay, so US person's ownership in that foreign corporation and other transactions between the foreign corporation and US person. Now, you can see that throughout this presentation, I'm using the word US persons, okay? And the questions from the beginning talks about a foreign person. So without even going into too much details, you know that this foreign person that has a US LLC, which is disregarded and has a foreign corporation, is a foreign person. It does not fall into the definition of a US person. So again, that person should not be thinking about 5471. But we will go more into details to, further solidify the reason why 5471 is not required either by the disregarded entity or the owner himself. Okay. Right. So if you lost track of the facts and circumstances surrounding this question, it's right here on your screen. The foreign individual ownership starts from when the foreign individual owns 100% of the LLC form in Delaware. And then the LLC is considered as a disregarded entity for U.S. tax purposes since it is owned by a single member and has not elected to be a corporation. Okay, so this means that if you have a LLC and you have not elected the LLC to be a corporation and it's owned by one person and it's owned by a foreign person, that is a foreign-owned U.S. disregarded entity. Okay, this means that the entity itself does not pay taxes. Instead, the income is passed through to the owner. Okay, so whatever income your LLC makes, your LLC, as long as it's a disregarded entity, does not file its own taxes. Of course, there are some information report that the LLC needs to file, which is the pro forma 1120 and 5472, but that's on another video that we can talk about that later. And if you want to learn more about the pro forma 1120 and 5472, I have a whole bunch of videos on YouTube that describes who and what needs to be filed. Okay, but in this case, we're just trying to answer a simple question here about 5471. Okay, now this fact also stated that there's no U.S. income. The LLC has no income source from the U.S., which is all good. I don't even think it's relevant to this situation. And then it also says that this foreign individual, okay, who owns the U.S. LLC in Delaware also has a foreign corporation, which is outside the U.S., okay? And he decided to transfer 100% shares of that foreign corporation to the Delaware disregarded entity. Okay, and the question is still, do we need to file 5471? So we're going to continue hammering on that issue. Now, before we think about any other thing, let's also talk about what are the kind of filing requirements that gets triggered before the transfer. Okay, now the foreign corporation, as we know, was directly owned by the foreign individual. Now, assuming the foreign corporation has no U.S. income and there's no U.S. person involved in the ownership or control, Form 5471 will not be required by the foreign individual in this case. Okay, now the fact that was given to us says that it's a foreign person that owns the foreign corporation. So if a foreign person owns a foreign corporation, 5471 is out of the picture. Okay, all right, let's move on. Now, what is going to be the filing requirement that triggers after the transfer? Okay, so the fact also states that the foreign person, okay, that has the ownership interest in that foreign corporation transfers his 100% of the shares in that corporation to the newly formed Delaware LLC that he has, which is a disregarded entity. So once the foreign corporation shares are transferred to the Delaware LLC, and given the LLC is a disregarded entity for U.S. tax purposes, the owner, okay, this foreign owner, will still be treated as the direct no owner of the asset and the activities of the LLC. Okay, so now, what kind of asset does the LLC have? The LLC have those 100% shares of the foreign corporation after it was transferred to the LLC. Okay, now the LLC is disregarded, and who owns it? It's a foreign person that owns it. So we look at the foreign person, and the foreign person basically owns and controls the assets and liabilities of that LLC. Okay, so the foreign person is a direct owner of the asset, and the asset sitting within the LLC is the 100% shares of that foreign corporation. Now, since the foreign owner is a foreign individual, okay, that's the direct owner is a foreign individual, the primary question is whether this transfer triggers 5471 filing requirement due to the change of ownership structure, and because the disregarded entity now holds a foreign corporation shares. Now, the simple answer is neither the disregarded entity nor the foreign owner will be required to file 5471. Because number one, the LLC itself, which is disregarded, does not have U.S. residency. Okay, we look at the residency of the owner, and the owner is a foreign person, then the 5471 is not required. Okay, now when I talk to many people that are not very inclined with U.S. taxes, I have to continue explaining this whole rationale all over again. I have to continue explaining it in so many different ways. Okay, but the question is already answered, but I'll continue to explain it for you to understand why 5471 is not required. Okay, so one other way I can explain this is using organizational flowchart. Okay, so we'll look at organizational flowchart before the transfer. Now, the foreign individual, before the transfer, we know that the foreign individual owns a Delaware LLC, which is a disregarded entity, and he also owned B, a foreign corporation. Okay, and 100% of those shares were owned by that foreign individual. This is before the transfer we're talking about. Now let's go to after the transfer. Now after the transfer, you have the foreign individual owning the Delaware LLC, which is disregarded, and now the Delaware LLC owns the foreign corporation. Okay, because the 100% of the shares that this owner, this foreign individual owns in this foreign corporation was transferred to the LLC. Okay, so now this LLC here has an asset, which is the common stock or whatever stocks of the foreign corporation, which is here. Okay, so now it's been simplified to the extent that the foreign person owns the LLC directly and then owns the corporation here, the foreign corporation, indirectly. Okay, through the LLC. Now we're still analyzing the situation. Okay, the question has been answered already, but let's continue to analyze it so it makes more sense to many people. Now, the transfer of the shares from the foreign individual to the Delaware LLC does not in itself trigger Form 5471 requirement based on the information the person provided. The second analysis we need to make is about a disregarded entity status. So what happens to that disregarded entity that now hold the shares of the foreign corporation? Now, for the U.S. tax purposes, the LLC is disregarded. Status means that its activities and assets are considered directly held by the owner, who is a foreign person. However, since the owner is a foreign individual, the typical Form 5471 reporting obligation, which I told you earlier before, it's for U.S. person, does not apply to this person in this scenario. Okay. And let's look at another analysis of this. Potential U.S. tax implication. If the LLC was owned by a U.S. person, okay, and that U.S. person transferred his shares to the LLC, okay, if the U.S. person transfers his shares of the foreign corporation to the extent that now the LLC, which is disregarded, owns the foreign corporation, then yes, the owner of the LLC will be filing Form 5471, okay, because now it is a U.S. person who directly and indirectly have ownership of the foreign corporation. Okay, now let's rephrase it. The U.S. person here will be owning the LLC membership interest directly, but then will be owning indirect interest and control of ownership of the foreign corporation through the LLC. Okay, now we've also said that disregarded entities do not file their own tax returns. So guess what? Who gets to file a return? The owner of the LLC gets to file the returns and then attach 5471 and report everything on 5471. So this is the scenario if the owner was a U.S. person. But in the original scenario that was given to us, that was a foreign person, and a foreign person with a U.S. disregarded entity, and where the disregarded entity owns shares in that foreign corporation, does not file 5471. Again, you should be thinking about the information return, the other information returns for disregarded entities, which is the Pro Forma 1120 and the 5472, and also the new law in town, which is the beneficial ownership information reporting, also needs to be filed. If your LLC or your corporation existed before 2024, you have up until January 1, 2025 to file these forms. So you can start filing now. if you form your company in 2024 and beyond, you have 90 days to file those beneficial ownership information report. And those ownership information report is filed with FinCEN, which is the Financial Crimes and Enforcement Network. So I hope this helps you guys out. And if it does, please click like, share, subscribe, and I'll come with you with another video. Thank you. Bye.